back to Market Matters with me, Nadia, Hassan, and Jonathan Gan. We are looking at companies in the news, and we have, boy oh boy, do we have a bonanza for you today. We are looking at AirAsia X. AirAsia X late yesterday, revealed that they had found certain services had been fictitious.
So, actually, we spoke to Benjamin Ismail, acting CEO, who actually revealed today that an internet research company was actually behind the fictitious services. So he also said that...
but he didn't say who.
Yeah,
that's the million-dollar question, isn't
yeah,
it?
exactly. We are all waiting to find that one out, Nadia.
So this is just, for me, yet another blow to AirAsia X, because already you have tough environments. Already you have numbers that are, look at this, losses. What the losses were that were deepened in second quarter of 2015. I heard the conversation with Ben today. He was saying that although when you asked about whether or not they will be profitable this year, he says, he did give the thing that they're on the way there. But how long will the journey take?
Well, the thing is that I feel that although AirAsia X has continued to suffer losses, we see that they actually stemmed the losses to a significant degree at this point in time.
But you still wouldn't buy it, would you?
No, because no one buys a company in the red, Nadia.
How can you not? Maybe it's a bargain.
Well,
maybe it's okay. Speaking about from moving on from something as rocky as airlines, we're going on to banking. So we actually had a slew of banking results coming out today. We are taking a quick look at RHB and CIMB. Both of them, they seem to follow the whole thing with Maybank. Everything seems to be in line.
It is in line, but we see that Maybank's CEO, Farid Alias, Datuk Farid Alias actually, he has said that the bank is actually focusing on selective asset growth and deposit taking, which means they are actually sort of like holding back, being more conservative.
But that's what we saw with Maybank yesterday. Maybank also said that, OPEX actually went up. They're sort of pulling back a little bit. CIMB also didn't have the best of numbers either. But they still fell in line. They still fell in line, so it was still resilient. And let's not forget, banks are the barometer of the economy. So although CIMB has had a tough time, I have seen that the numbers still prove that it's slightly resilient.
Well, I do agree with that, Nadia. Banking isn't bad. It's just that typically...
You don't like banks, you don't like airlines.
If you are looking for capital gain, you'll be sorely disappointed.
But I don't think you buy a bank for capital gain. You buy it for dividends.
Correct. And typically, they are considered too expensive by the average investor. Mom and pop guys.
Yeah, I know, but okay, overall, what does this mean for the banking sector? You still see health, you still see resilience, but I think it's not going to get any easier for them. Come on, at least you have to agree with me on that.
I agree with you on that, yeah.
All right, thanks a lot for that and watching today. I'm Nadia Hassan together with Jonathan Gan and Charlotte Chong. Thank you for watching Market Matters. If you actually want more, go to theedgemarket.com and see you guys next week. Have a good weekend. Be safe no matter what your plans are. Good night.